Hey traders, Nick Shaheen here looking at Splunk. This is more so to show how I would go from, if I see something on TV or I read something in the paper, an idea to trade a stock or a ticker, how can I translate it into a plan of action? Do I just blindly follow them, or do I do my own research? I tend to not blindly follow them. I will look at what they say and see if I can make sense of it. Poke holes in it, see if it's valid, see how I can trade it. 1218, CNBC had a bit with a technical analyst, nice guy, suggesting that Splunk has another leg higher. I don't disagree right from looking at it, but I need a little more information. So as far as a company, I don't know a lot about it. I know the basics. It's not cheap, but that doesn't matter. The chart is a chart. So I'm going to use a chart to follow a technical opportunity that this guy had on TV. So I already put 2 lines on it, so I cheated. I didn't have any lines on it. I had lines earlier, like from months ago, but those played out. I added these 2 lines. And so, but before I forget, at the end there'll be a subscribe button on the left-hand side that pops up. Please hit it. It's free on YouTube channel. And if you're interested in chatting online, chat room pass, free pass down below. Hit it. So here's basically, I'll start with the summary. I would chase it, but in either direction. I'm not married to his upside opportunity, although it is possible. The 2 slower pace lines to watch are 141.5-ish. Basically this one, or maybe this one even more solid at 139.5. I would chase it lower if those fail. If it breaks above 152.5 or this fail point, I would chase it higher. So that's the summary from me listening to this guy. His message is going higher. I forgot why he said that, but recently it rallied a lot from the earnings, and I hate to chase a stock just because some guy on TV said so. There are lower time frame trigger points, and I'll go into them in a little bit. But first, some observations on the bigger picture. Let me see if I can mark it up. So first observation is that the breakout really happened here, or here. It depends on where you draw your line. So this was a major fail point, and once they took it out, they rallied. This was supposed to be another resistance level, so is this. But the rally off the earnings, whatever the heck they said, was pretty fantastic. However, it left an open gap below. So now that becomes a lot of people trust in filling gaps. Not every gaps get filled, but one like this might get filled. So what would get it to fill? I'm not calling that it's going to collapse into it. So it happens usually one level at a time, short of a headline. So the idea is if they fail here, they're going to do it like so. They're going to attack the neckline, maybe bounce one time more off of it, and then if they fail below it, this happens. Conversely, if they go above this neckline, or if you want that neckline, they're going to come back to it, hit it, fail, hit it again, go above it, and then come down to it. This kind of a deal. Breakout and breakdowns rarely happen like this guy here. This was a binary decision at one day. So are there lower time frames we can look at? Okay, that was a daily chart. This is a 2-hour chart. Those are the same 2 lines. So if I were to put 2 tighter lines, I can put them, I'm going to use a box. I can put them here. Those are the 2 immediate tighter lines. What happened to the 2 alerts? That was weird. They're gone. So it all depends on how fast people trade. Now, some people will say, okay, this is clearly a trigger level to short. Me, not so much. But if you look at it, this would be an inverse cup and handle type of a deal. Whether it's exactly one or not, I don't care. All I care about is there is a neckline that gets attacked, and if it's lost, then they overshoot lower. Same above. So one can argue that there is a lower time frame neckline here or here. So, or some people like to chase trends. So if this trend is broken out, then this can happen, and usually they'll do it something like this. Whoops, I'll stop it here. So arguably, there's a short-term tightening trend that may resolve itself, unfold like this. Which is to come first? Weird that the other two lines disappear. Let me go back to a daily. Maybe they're still there. They're just not showing up. Yeah, they're not for some reason. Weird. Okay, so this is one scenario. If I go on a lower time frame, I can probably get smarter with the lines, but it depends on how fast I'm trading. I'm not that trade. I don't aim to trade this fast. Clearly, over the long term, this is a winning stock, and I don't want to argue with it if it's broken out. I don't want to short it just because it's near all-time highs. The guy made some good points. You could argue that it's an ABC type of a move or 3 pushes, or whatever you want to call it. To me, it translates into one effort, and then they breathe to consolidate some profits, and then a secondary effort. So they burst, they breathe, and then they burst again. So why do they breathe? Because when you get so much fast profits, you have to consolidate them, trade them back and forth, establish a base. Sometimes they give up half of it, Fibonacci guy, and then you rally and finish the job. So Splunk could be a long, but it also could be a short. But the point of this video is not to tell somebody how to trade Splunk for this particular opportunity, but to show how I can look at the segment on TV and translate it into actionable, so I don't blindly go buy calls, and then the market takes a dip, and then I'm out money. And then I call the guy an idiot. Well, he's not getting paid for telling me to go buy calls, so I should do some homework before I just buy calls or sell puts or put spreads. Nick signing out.